As Benjamin Franklin said, there are two things that are guaranteed in life: death and taxes. And in this video, we're going to talk about taxes for the Uber driver and Lyft driver. Especially if you've never been an independent contractor before, tax accounting can get a lot more interesting compared to your conventional 9-to-5 job. And in this video, I'm going to give you 5 write-offs that are absolutely important when it comes to your taxes as a driver. First off, I want to give you 2 quick tips before I get into the rest of the video. First off, I'm a former accountant, in case you didn't know, but I'm not your accountant. The best advice I can give you right from the get-go is hire a tax accountant. And I know, you might be like, well, Mark, I have TurboTax, or I can use this tax software, or I can do it on my own. Because you're doing write-offs, things get a lot more tricky. Even for me, I hire a tax accountant to do my taxes. Even though I know a lot about taxes, even though I know a lot about accounting, I still hire a tax accountant. You should as well, as everybody's situation is a bit different. And quick tip number 2 is track everything. Save your receipts anytime you buy anything that's even somewhat related to Uber or Lyft or ride sharing in general. Save the receipt. You're way better off going to your accountant saying, hey, I have all these receipts, and he says, I don't think this one's gonna work. Or she says, you know what? Sorry, I can't write that off. You're way better off that happening than them saying, hey, you said you bought this thing, you can write that off, and you don't have any proof that you purchased it. Make sure you save all your receipts, track everything. With that being said, let's get into the write-offs. Number 1 is miles over gas. Now, there's a lot of different things you can write off in general. When it comes to miles and gas, though, you can either write off one or the other, but not both, typically. So, when it comes to, like, say, you in particular, and for most people, I'm going to say 95% of people, you can write off way more money when it comes to the miles you drove than gas. It fluctuates. It's going to be something like, I'm just making this up because it depends year to year. You can write off 56 cents per mile that you drove in relation to Lyft and Uber. Now, Uber and Lyft, let's say on your dashboard, whether it's at the end of the year or typically like the beginning of next year, they will say something like, hey, just letting you know, we have all these documents and whatnot prepared for you when it comes to your tax accounting in terms of all the numbers. Here's how many miles you drove. And yes, you can write those off, but that's not the full story. For example, let's say you go and get work done on your car. You drive 5 miles to the dealership, to your mechanic, whatever. You drive 5 miles back. So 10 miles in total. More likely than not, you can write off those miles because those miles were driven in relation to Uber and Lyft. Any single time, for the most part, that you drive at all and it's in relation to Uber and Lyft, you can write off those miles. Let's say, and I've heard them doing this sometimes, depends on the city. Let's say they do a workshop for Lyft and Uber, and they say, hey, come in this area, you can meet other drivers and get to know more information about driving for Uber and Lyft. If you go to that event and come back, you can write off those miles. Number 2, maintenance. Now, of course, you're driving for Lyft and Uber, and for most people, you're using your own vehicle. Even if you're renting, if you think about it, that maintenance you do on your vehicle, let's say you get new brakes, let's say you need to get something done, well, that is in relation to Uber and Lyft. One big part of tax accounting is to ask yourself, is this purchase I'm making part of the ordinary and necessary course of the business? Well, if you're driving and you have a vehicle and you're getting new brakes, of course that helps your car be better, right? Also keeps it very safe to be able to drive. So therefore, those new brakes are in relation to Uber and Lyft, and you can write those off. One thing I do have to stress, though, as a side note, make sure, like I said, you save all your receipts because it depends on what your tax accountant's going to say. For example, if, let's say, you write off your brakes that you just paid, you got new brakes. Well, you might be using your vehicle to drive for Lyft and Uber, but you're also probably using your vehicle for personal use as well. You're going to your friend's place. You are buying groceries. So this does get kind of tricky per purchase. This is why your tax accountant will figure that out. But remember, any single time you get maintenance on your vehicle, you can write that off. Number 3, amenities. What I'm talking about is anything that you buy that's meant to improve the ride-sharing experience. If you buy an aux cord, what you should do. If you buy a phone mount, which 100% you absolutely need, it still shocks me when I get a Lyft and Uber here in LA or anywhere else, and the driver's doing this thing while driving, just get a phone mount. Anything that you buy, I already did a video about the 10 items that every Lyft and Uber driver absolutely needs. And that is a big thing. If you buy napkins for your car, if you buy any gum or mints, if you, I don't know, anything that you buy that's for the ride itself and improving the ride sharing experience, like say a phone charging cable, anything along those lines, those are write-offs. Number 4, your phone. So when it comes to your phone, similar to maintenance, like I said before, it becomes like a personal versus business situation because for most drivers, you are using one phone. The same phone for Uber and Lyft and the same phone for your personal life. So your tax accountant might ask you a question like, all right, how much of your phone percentage-wise is personal versus business? Do you use it for, I'm just making this up, 30% is Lyft and Uber, 70% is personal life, etc., etc. And this may depend person to person. If you're driving a lot, you more likely than not can write off a lot of money or more money on your phone bill, your plan, and everything. Then let's say somebody who's like, yeah, you know what, I do 1 or 2 rides a week. You might not be able to write off as much, but this is something to keep in mind. Another thing is I know a lot of drivers like to have a second cell phone just for Uber and Lyft. Being honest, I don't think it's necessary. I think it's a complete waste of money. But if you do happen to have a second cell phone, more likely than not, you can write off 100% of that. Because if you have a phone and you're like, look, I have a second cell phone. It is just for Uber and Lyft. I don't use it for personal calls. I don't have any personal text on it. It's just for driving for Uber and Lyft. You are more likely than not going to be able to write off that entire phone and that entire plan. Number 5, your car payment. So of course, you need a car to drive for Uber and Lyft. So if let's say you're renting the vehicle through Uber, Lyft, or a third-party service, you can write that off. If let's say you took out a loan and you own the vehicle or you're basically paying it off, you can write that off. Your car insurance is another big one. And not only just car insurance, but make sure you get rideshare insurance. You could also write that off as well. So not just the typical auto insurance that you have, but then the rideshare insurance, that's tacked on top of that. These are all write-offs. And lastly, a big bonus tip that I want to give to conclude this video, and I've said this before, do not use tax software. As you can imagine, maybe a bit annoyingly so, throughout this video, I kept saying, well, it depends on your situation, or more likely than not, you can or can't write this off. When it comes to tax software will always use the safest option. They will always say, well, you know what? We don't know how much of this you can write off, so we're going to kind of allow you to write off the least amount. With an actual person or an actual tax accountant, they can review your situation and say, okay, you want to write off your cell phone plan. Well, let me figure out exactly how much of it I can write off, and let me figure out what I can do in order to get you the most amount of money you can write off. Having a person actually review your financials, understand your situation more, because another thing too is, let's say you're not just driving for Uber and Lyft. Let's say you have Uber and Lyft income, that's you as an independent contractor. Let's say you have a W-2 because you work another 9-to-5 job or another job. That's going to be a lot of a tricky situation tax-wise. And a platform like TurboTax or any of these other tax softwares, just not worth it. And I know Uber and Lyft has some deal worked out where they say, hey, you want to do your taxes? Click this button and we'll give you, 20% off TurboTax. Do not do it. Hire a tax accountant. Now, a big thing with tax accountants is they will charge you money. Probably not surprising. I pay my tax accountant $250 to do all my taxes for me and my entire tax return. However, that $250 that I spend is so small into the amount of money he helps me write off. He can review everything. He lives, eats, and breathes taxes, and he'll say, yeah, you know what, Mark? This is a bit of a gray area, but because of this and this, you actually can write this off. So I'm able to write off a lot more money by using him. And even though up front you might be like, well, a tax accountant is going to cost a lot more money than TurboTax, which is definitely true, right? Tax software is going to be a lot cheaper than an actual tax accountant. You're going to be able to save way more money in the long run by hiring an actual person, an actual human, to do your taxes as opposed to tax software.